Okay, let's get right into this. Because this week, something truly wild happened with one of the biggest companies in the world. I'm talking about Microsoft, the undisputed king of the whole AI revolution. They managed to have one of their best days ever and one of their worst days ever at the exact same time. It's a total paradox that has Wall Street scratching its head. So today, we're going to untangle exactly what went down.
Let's just start with this number because it is absolutely insane. $360 billion. That's how much value was just, poof, erased from Microsoft in a single day. It was their worst stock drop since all the chaos back in 2020. I mean, a brutal, shocking plunge that left everyone asking the same question. What on earth just happened?
Because, see, this is where the paradox comes in. On paper, Microsoft was on fire. The company had just announced they'd made more money than ever before. For the first time ever, their cloud business alone brought in over $50 billion. By every metric, this should have been a party. Instead, it was a bloodbath. So, what did Wall Street see that the rest of us missed? How can a company just blow past expectations and still get punished like this? That's the mystery we're going to solve right now. We're going to follow the clues hidden deep inside their numbers to figure out why the market is suddenly so terrified of the king of AI. All right, so to solve this thing, we have to start with the good news, the part of the story that makes this whole situation so confusing. Because by every standard measure, Microsoft didn't just do well, they did incredibly well. Look, the experts on Wall Street, right, they predicted Microsoft would bring in about $80.3 billion in revenue. Well, Microsoft came in and dropped $81.3 billion on the table. They also made more profit for every share than anyone thought they would. So it was a clear win. No confusion, no excuses, just a solid beat. And this was the market's reaction. An 11% nosedive, a complete and total rejection of those amazing numbers. This wasn't just a little dip. This was a panicked sell-off. So if the results were so good, investors must have been spooked by something about the future. And that brings us to our very first clue. And that gets us to the first huge piece of the puzzle. The thing that scared investors wasn't about the money Microsoft was making. It was about the incredible, truly eye-watering amount of money it was spending. $37.5 billion. That's how much Microsoft spent in a single quarter on things like data centers and AI chips to build its future. To give you some perspective, that's more than some huge companies spend in an entire year. It is a record-shattering number. Yeah, their spending is up a whopping 66% from last year, and almost every single penny is going towards building out their AI systems. The best way to think about it is this. Microsoft is building a series of massive, unbelievably expensive AI factories. The problem? The market is starting to worry that they're building these giant factories before they have enough customers lined up to actually pay for it all. But Microsoft has a really powerful comeback to that argument. Their chief financial officer, Amy Hood, basically told Wall Street, "You've got it all backward." She said this isn't a demand problem, it's a supply problem. She said demand for their AI is so incredibly high that they literally can't build the data centers fast enough to keep up. So to Microsoft, this spending isn't a gamble, it's a race. But, that massive spending wasn't the only thing that rattled the market. Investors found another crack, a tiny but really crucial detail inside Microsoft's most important business, its cloud platform, Azure. So here's what the bears, the pessimists, really latched onto. Azure is Microsoft's golden goose. Its growth rate is what makes the company's stock so valuable. Last quarter, it grew at an unbelievable 40%. This quarter, 39%. Think of it like a supercar on the highway. I mean, it's still going ridiculously fast, but for the very first time, it tapped the brakes. That 1% slowdown was a huge red flag for a lot of people. And here's the final clue that really tied it all together. Microsoft revealed that it has a $625 billion backlog of future revenue already under contract. Sounds amazing, right? But then they dropped the bombshell. A massive 45% of that, almost half, is tied to a single partner, OpenAI. This suddenly creates this huge risk. If OpenAI, a company that is still burning through cash, hits a speed bump, it could take a massive chunk of Microsoft's future down with it. So let's put all the pieces together. With all these clues on the table, two completely opposite stories about Microsoft's future start to emerge. So this is the battlefield right here. On one side, you have the bulls, the optimists. They see this overwhelming demand that Microsoft can't even keep up with, a massive backlog of future money, and incredible growth in new AI tools like Copilot. They see a company that's investing to dominate the future. But the bears? Well, they see a company burning cash at a record speed, they see slowing growth in their most important business, and a really dangerous dependency on just one partner. And that is the real tension at the heart of this whole paradox. After years of cheering on AI investment, the market is suddenly asking for the receipts. It's not enough anymore to just spend billions on AI. Now, companies have to prove that all that spending is going to turn into real, actual profit. And Microsoft is the first one being put to the test. Which leaves us with the ultimate question. Was this 11% crash a massive overreaction? A historic chance to buy into the leader of the AI revolution at a discount? Or is it a major warning sign that the whole AI bubble is getting a little fragile? Based on everything we just went through, what would you do?